Good morning, everyone, and welcome to the Schools Out Conference presented by PIA Law. My name is Darcy Merker, and I'm a partner at Thompson Rogers. Coming up is Adam Little, as I mentioned. He's co-chair of today's conference. You should all know him from Oatley-Vigman. I'm also introducing Brandon Peterson, spelled with a D, but it's pronounced with a T, an upcoming star at McLeish Orlando, who's prepared a wonderful presentation. Let me just outline the scope of what this panel is going to present today. First, I'm going to start by talking about the basics of accident benefits and how they've changed. This is a crowd, some of who are absolute pros when it comes to accident benefit rights, and some who are novices, fresh out of hospital, fresh OTs, may not understand anything. So I'm going to go over the basics and explain how we got here. Adam's then going to follow talking about the details of the changes. I'm going to broad brush them. And then Brandon's going to come up and talk about some solutions. Dealing with my part, I'm going to start with a brief history of no-fault benefits. I'm going to talk about the basics of no-fault benefits so that everyone has some framework of understanding what it's all about. I'm going to talk about how benefits have declined in real terms since 1996, a topic of extreme frustration. I'm also going to talk about how healthcare provider rates haven't moved an inch in 12 years. I hope I don't inflame the crowd too much, but you guys are all dealing with it and understand it. And then we're going to talk about the July 1st overhaul. I'm going to introduce the topic, and then Adam and Brandon are going to deal with why it matters and some solutions. Let's go back to the brief history. No-fault benefits were first introduced in 1990. They were introduced by the Ontario government as a social safety net. That's how one of the ministers described it before it was announced. I want to focus on that, a social safety net, and that's what it was. It was meant to ensure that everyone received compensation after they were injured in a car accident, regardless of fault. And the concept was you'd provide basic compensation in terms of income loss, medical coverage, other benefits, to make people whole, to reduce the scope of lawsuits and the need for lawsuits, and because some people don't have a lawsuit because they caused their own accident, unfortunately. It was supposed to be a balance between what we call tort rights, lawsuit rights, the ability to sue, and these no-fault accident benefits. And the aim was to stabilize rates and reduce costs by restricting lawsuits, by having this permanent and serious threshold, which some of you know about, limitations on the ability to sue for only very serious cases that affect people long-term, and having enhanced benefits available to all. And over the years, it says amended, but it really means reduced, and you'll hear more about that. But it's amended 94, 96, 2010, 2016, and now again in 2026. And the 1996 version is really the template for what we're dealing with right now. That's the version that included these injury categorizations, which we're going to talk a bit about. Moving on to who qualifies. So again, this is easy stuff for most of the people in the room, but I wanted to go backwards for a second. So anyone hurt in any way by a car or a motorized vehicle in Ontario automatically qualifies for no-fault benefits. That will remain despite these changes, but the scope of those benefits will be changed drastically, and I'm going to review that. But just to make it crystal clear, that means pedestrians hit by cars, bicyclists hit by cars, passengers in vehicles, drivers, motorcyclists, and on the last two, there's some question marks because ATVs, e-scooters, e-bikes, very specific. It's specific to where the accident happened. It's specific on the type of e-bike and e-scooter, so it's a maybe. That's the easy way to think of it for this audience. Criminal convictions affect benefit entitlement, but you still get something. And fault is irrelevant. Just to be clear, though, this does apply for accidents within Ontario. Some people qualify for no-fault benefits for accidents within North America if they have their own car insurance. But for anyone injured in a car accident in Ontario, hit by a car, they'll qualify for no-fault benefits. And the framework, as I mentioned, starting in 1996, was the three injury categorizations. Whiplash, which we call MIG, or Minor Injury Guideline, where the benefits was capped at $3,500. There is an exception for pre-existing issues that can jump you to $65,000. But MIG for whiplash, what we call non-catastrophic impairment, which is fractures. I use the word validated concussions because the insurance companies don't accept that's just because an OT or a family doctor or somebody or even the hospital people put on concussion. It is a concussion that gets you into this category. So when they're convinced it's validated, you're eligible for $65,000 over 5 years, or for minors until age 28. And a catastrophic impairment, the most serious injured persons, I'm going to talk a little bit about, where the benefit limit jumps from the $65,000 available to non-catastrophic accident victims to $1 million, an extra $935,000, plus some other stuff like housekeeping benefits that may change come July 1st. But consider it a $1 million swing for a catastrophic impairment designation. And right now, not only do you get these medical rehab attendant care limits, you get other stuff like income benefits, housekeeping benefits if you're catastrophic, death and funeral expenses where appropriate, lost educational expenses, damage to clothing. You get a lot of other stuff, the most important ones in my view being visitor expenses and income replacement benefits for most injured people. Just dealing quickly with catastrophic, it's such a big swing that you should understand how you get there. And there's a lot of confusion. We get a lot of questions from people about this. The only ones who can ever get a CAT designation, which is important, as I mentioned, $1 million swing, are people who have the most serious paraplegic, tetraplegic, losing arms and legs, blindness. They get it right away, pretty easy, simple. Everyone else has to wait. The brain injury tests of the next 3 columns can be 1 month if you're in a coma, 6 months if you're at a level of independence that's at a certain level, I'm simplifying matters, and 12 months or 1 year, an easier test. But these brain injury categories at 1 month, 6 months, and 12 months only kick in if you meet the prerequisite of having objective proof of a brain injury. Okay, so you could have a brain injury, you could have major complications. You don't get anywhere near these 3 tests unless you meet the prerequisite criteria. And then at the 2-year mark, there are other tests. The whole person impairment test, where they measure everything, psych, physical, orthopedic, all that, including head injury to some extent, or 3 or marked psych issues that are very significant. I'm not going to get into specifics. But it's a big swing. They're all delayed. There is a way to access the 2-year tests early, but it doesn't work because the insurance company's experts just say it's premature to say that it's unlikely to cease to be permanent. So it's not worth it. You have to wait 2 years realistically. For children, those under 18, there is a bit of a favorable exception or additional test where if you're admitted to Holland Blue Review in the brain injury rehab program, you automatically qualify, or a rehab hospital for kids. And if you're at Sick Kids Hospital, just by way of admission, and you have positive imaging, you meet that prerequisite, you automatically qualify. So children, the CAT designation is pretty simple. Remember that most of the crowd understands that before 2016, the brain injury test was Glasgow Coma Scale based, which is something the ambulance attendants did on scene, and you'd know whether the person's CAT 1 day after the accident or the day of the accident. It was simple, but the legislation was changed because the government felt that was not reflective of the long-term problems, and they wanted to adjust it so that people with longer-term brain injuries meet the CAT designation, not people who immediately were unconscious or not alert to qualify for a Glasgow Coma Scale reading of 9 or less. Now we rely on the Glasgow Outcome Scale, the extended version, based on various standards that kick in. Decreasing accident benefit entitlement. As I mentioned, when the programs started, it was meant to be a social safety net. And the social safety net, at least from 96, I'm not going to go back to 1990, was $172,000. The non-CAT one is on the left of your screen. $172,000, $100 for med rehab, $72,000 for attendant care. In 2010, they dropped it to 50 plus 36, which totals $86,000 in combined medical rehabilitation and attendant care. Then in 2016 and again in 2026, it's cut to 65 grand. For catastrophic, in that same time span, it went from $2 million down to $1 million. $1 million drop happened in 2016. And I'm talking about the combined medical rehabilitation with attendant care benefits, which is the current way of doing it. Before 2016, you had 2 different buckets, and these are the totals. There's also other stuff like income replacement benefits, housekeeping, home maintenance, visitor expenses. I'm not going to get into that. But I will add that in 2016, they also took away non-earner benefits, or at least the scope of them. They're still available, but now they cap out at $18,500, where before the 2016 change, it could be worth $400,000 for injured youth. Uh-oh, inflation. Consider inflation on those benefit limits. That $172,000 non-CAT combined limit from 1996 in today's money is $320,000. you only have $65,000 available. There's a $255,000 gap in the real value from 1996 to 2026 in that 30-year span. An 80% drop. On the CAT side, that $2 million of combined benefits from 96 was worth $3.7 million adjusted for inflation in today's money. Down $2.7 million to the $1 million now available. A 73% drop. So this idea of a social safety net has a lot of holes because it's dropped 80% and somehow the government's pitching it as a balancing of lawsuit rights and benefit entitlement. I say not. Now, this is going to piss everyone off. Healthcare rates. 2014 regulation, they passed regulated rates. Insurers rely on the regulated rates to pay people. For example, occupational therapists get a whopping $99.75. That was from 2014 for non-CAT. It's higher rates for CAT. So you'll see in red the columns. Adjusted for the 34% inflation since that 2014 regulation, there's a big gap. And the rates remain the $99 for occupational therapists. In 12 years. What other industry hasn't had rate increases in 12 years? I can tell you that the ministers, the Ontario ministers, have had a 40% rate increase, income increase since then. And the minimum wage has increased by more than that. So you guys are getting screwed, our clients are getting screwed, and we're all working with less money, our clients and all the providers who do wonderful work with very little remuneration. And you're facing all the other problems, the mileage, the travel. I'm not going to get into that right now, but you know all the other problems you're dealing with and the difficulties we have with insurance companies. My last few slides. Before July 1st, this was your standard policy. It was a buffet. You get it all. Here you go. You can take whatever you want. You can have the steak, you can have the potato. You have the steaks, the med rehab, everything else is the income replacement benefits, the housekeeping, everything. That's for accidents before July 1st. Okay, I'm going to focus on the accidents before because people are going to say, well, what happens if I have a case before? Accidents before, this is what you get. Everyone. Doesn't matter if you have car insurance. Doesn't matter if you're hit by somebody and you don't have car insurance or if they have car insurance. Everyone gets the standard minimum, the buffet. Here's what you get now. For accidents after July 1st. It's a la carte. You just get the steak. You just get the standard benefits, being medical, rehabilitation, and attendant care benefits. Nothing else. Now, some of you who drive have options, and we'll talk about that. But people who don't have direct car insurance, this is what they're getting. The 40% of the population that don't have car insurance, that's all they get. Nothing else. You can buy extra stuff. You could buy income replacement benefits. You can buy visitor expenses. You can buy the whole buffet and recreate it. But it's a la carte. You have to choose it. And you have to choose it before the accident happens, of course, which people don't, unfortunately, have the foresight. It's only after the fact they say, damn, I wish I did it. So when Brandon talks, he's going to encourage you to buy more benefits, and that is wise. The last slide I'm going to talk about before I pass it over to Adam is there's one change that's kind of good. They've switched the sequence. Before July 1st, or for accidents before July 1st, your group health was first to pay. And that caused this room headaches because you get approval from insurers, and then you say, okay, now pay me. And they say, well, hold on. Did they have group health? And you say, well, yeah, but it's not covered. Oh, well, get me a letter. And you had to rely on the patient, the claimant, the client, to do all the red tape, and you had to help them out, and it was a headache, and you'd take forever to get paid. They've switched it so you guys get paid first, directly from the car insurers for accidents after July 1st. That's an excellent change in my view. And it gives some options about group health potentially supplementing that, and some other stuff that Brandon's going to talk about. The only thing is for medication, they've kept it the same, which makes sense because people have relationships with their pharmacy. You don't want to switch it up. So that's still covered in first priority, but group health. And group health is now second, and accident benefit first. I'm going to now pass it over to Adam, who's going to talk in much more detail about these big changes, and then he's going to pass it over to Brandon to talk about some solutions to deal with it. Thank you.
Thanks, Darcy. If you thought that what Darcy was telling you was bad, Wait till you meet me. There's big changes coming on July 1st, and that's why I threw a question mark at the end of Happy Canada Day, because I'm not sure it's going to be a Happy Canada Day for the auto industry, the auto insurance industry. You really can't hate politicians enough. At least I can't. Believe it or not, in putting these changes forward, our provincial government has tried to put a spin on it such that it's a positive thing. They call it enabling consumer choice, and that by not just forcing you to have the buffet that you had before, you can choose an a la carte menu that suits your needs. Of course, the reality is that what's actually going to happen is they're going to take away a lot of our coverage, and for people with new policies, they'll start out with very basic med rehab only, but let's get into that a little bit. So, effective July 1, there will be only one area of mandatory coverage for statutory accident benefits, and that is your medical rehab and attendant care at $65,000 if you're non-catastrophically impaired, $3,500 if you're in the MIG, and $1 million if you're catastrophically impaired. That's the only mandatory benefit that everyone, regardless of whether they're insured or not, will receive. Everything else will become optional. So you can increase your med rehab and attendant care limits, which you've always been able to do. You will be able to get income replacement benefits, but they won't be mandatory. Housekeeping and home maintenance, previously we were getting $100 a week if you were catastrophically impaired. Those become optional. Caregiver benefits, again, optional. Death benefits, funeral expenses, all optional now. Lost education expenses. And this is the one that kind of really doesn't sit well with me. It's visitor expenses. That won't be mandatory anymore. No one thinks that visitor expenses are important. It's such a small thing. But when you have a loved one who is at Sunnybrook or at Toronto Rehab, and you live in Barrie like I do, or you live in Windsor or China, and you have to come and be with your loved one, it's very expensive, and just parking for the day at Sunnybrook is expensive. Never mind the fuel costs to get there, the coffee and lunch that you might have. Those little small expenses that can't possibly be impacting auto insurance bottom line, they're taking those away too and making it optional instead of mandatory. Dependent care, optional. And then the one that no one's ever heard of, indexation benefits. I bet you didn't know, and even I didn't know this until these changes were announced. You can buy an indexation for your accident benefits policy in Ontario so that it keeps up with inflation, so that the numbers change over time and go up. I've been practicing for 25 years. I have never seen a policy with optional indexation benefits. Does anyone in the room have optional indexation benefits? There's a hand, 2 hands. Okay, I'm very impressed. Another significant change that's coming is who will be able to access these optional benefits. So let's say that you do the right thing and you've opted in for all your coverages, and you're out driving your car after July the 1st. Who can currently, any member of your family is going to be able to access optional benefits that you might have. But as of July 1st, it's going to be you, the named insured, the person in the household who is the contractor on the policy, that person's spouse, their dependents, so typically that's children, but it depends on the relationships, and then lastly, listed drivers. No one else gets those optional benefits. So if you're driving with, you own the car, you're the named insured, let's say, and you're driving with your friend as a passenger or your patient as a passenger, and an accident happens, will they get entitlement to your optional benefits? No, they will not. Your children will, your spouse will, and if there are people living in your household who are not dependent on you and they are a listed driver, they'll get those optional benefits, but that's it. The available limits are obviously changing, given these are becoming optional benefits, not mandatory. For example, you used to be able to get $15,000 in lost educational expenses. It won't be 15 anymore. It'll be whatever you want to purchase. Same with housekeeping and home maintenance. It was $100 a week if you're catastrophically impaired. Now it'll be whatever amount you want to purchase. Visitor expenses, they've always been unlimited. And again, they were typically not huge numbers, but there wasn't any cap on it. Now there will be. It'll be how much do you want to purchase in coverage for visitor expenses. And another small potato item, but it's important to our clients and your patients, damage to clothing and glasses and hearing aids that occurs in the accident. There's never been any limit on that, but now you'll be able to purchase an amount. Death and funeral benefits, which are very important in those tragic cases where a loved one is lost, they're gone from standard coverage now. It used to be that a spouse who lost their significant other received a $25,000 death benefit, and any dependents received $10,000. Now it's not mandatory, it's optional, and it'll be payable up to whatever amount you select and pay for on your policy. This is a bit of a curious thing to me. The government is now giving insurance companies the ability to offer optional benefits that we haven't heard of yet, new areas of potential coverage. I haven't heard any announcements about what those might be. I frankly don't have any idea what they might be, and it might be nothing. But there's the potential, at least, for you to buy benefits that are not currently available. So what happens to everybody in this room on July 1? If you have an auto insurance policy, an existing policy, nothing's going to change in terms of your coverage and coverage for your spouse, your dependents, and listed drivers. Nothing's going to change until renewal time. And then at renewal time, you will have the ability to opt out, if you want to, of the benefits that are currently available on your policy. Now, thankfully, it's opt-out. So I think that for most of Ontarians, I don't know, most people that I know, they get their insurance forms in the mail every year. They look at the price and they file it away. If that's what you do, you're going to keep your full coverages, which is a good thing. Alternatively, you can, in writing, opt out and pick and choose what coverages you want to keep. I was reading, there was an article in the Toronto Star on Monday about these changes, and at least there's one good thing. It is getting some media coverage because these changes are significant. And they were interviewing someone in the underwriting industry, and they asked, well, you know, how much are we going to save if we opt out of all of these optional benefits? And the answer was it's going to be about $100. So, you know, I don't know what you pay for auto insurance. I pay about $2,000 a year, and that's probably fairly average, between $1,500 and $2,000 a year. Might be worse if you live in Toronto. So we're looking at a savings of somewhere around 5%. Now, I know that for a lot of people in this economy, $100 in your pocket is more groceries you can buy and more rent that you can pay, and money is tight. But we're not talking about substantial savings. We're not talking about cutting your insurance bill in half. We're talking about not even saving the HST. Like, it's a very small amount. And my hope is that when people look at that and they say, well, I'm only paying $12 a year for income replacement benefits, am I going to be bothered to fill out this stupid form and send it back to my insurance company for $12? No, I'm not. So that's one of the saving graces of this, is that it is opt-out. But what about people who are becoming insured in Ontario for the first time. New policies. Well, for them, it's going to be medical and rehabilitation coverage only unless they want to purchase optional benefits. And those are the people that I'm most concerned about, because we all know that while medical and rehabilitation coverage is the core, it's the most important thing in this room, it's not the only thing. And income replacement, even at the terrible $400 a week that's been in place since 1996, is better than nothing. It's tax-free, so it is truly $400 a week. But without that, a young person who's maybe in their early 20s and gets in an accident and they can't go to their job anymore, and they get EI for maybe a short period of time, they're an independent contractor, they don't have the LTD and STD coverage that some people do, it's going to make a big and very bad difference to their lives. There's a tip on there that it is important, and that is to contact your insurer or your broker if you have any questions about these coverages. And that's the kind of thing you should be telling your patients too, and all your friends. Before you opt out of anything, if that's what you're thinking of doing, contact your broker. A quick case study so you understand the implications. On July 1st, Bob's a pedestrian. He's hit by a vehicle driven by Barbara. Barbara has all kinds of optional benefits. Good for Barbara. Bob doesn't own a vehicle. He lives here in Toronto. He doesn't have access to his own auto insurance. He's a construction worker. He doesn't have STD. He doesn't have LTD. He doesn't have any coverages. And he's got a brain bleed, and he's seriously injured, fractures, all of that. Under the current system, if this accident happened today, he'd have the full slate of coverages: medical and rehabilitation and attendant care, income replacement, visitor expenses, all of that. But as of July 1st, what will he have? What accident benefits coverage, if any, is available to Bob? The answer is med rehab and attendant care, nothing else. Even though Barbara had paid for full coverage, and let's assume she's at fault, she didn't see the pedestrian crossing at the crosswalk. Doesn't matter, that's being taken away. Would Bob be entitled to income replacement benefits? No, he would not, because again, he is not insured. Even though Barbara bought the optional benefits, it doesn't apply to him. What if his sister wants to come from out of province to see him? Would that be covered? Nope. 40 days later, Bob passes away. What death and funeral benefits, if any, would be available? We all know the answer, it's nothing. If this happened today, it would be $25,000 for his spouse and $10,000 for his dependents. As of July 1, it's nothing. So I promised you that I would be the bearer of bad news, and I think I've lived up to that promise. So now I'm going to turn it over to an attempt, at least, to be more positive, and that is Brandon is going to look at what are the solutions to this, to the extent that we can come up with them, and how can you protect yourselves?
Thanks, Adam, and thanks, Darcy. As Adam kindly alluded to, we're going to look at some solutions. They're not across the board, and nothing is groundbreaking. They're simply trying to identify different areas that we can look at to fill the void that there will be in the lack of coverage that is going to soon exist. Some solutions for a lack of income replacement benefit. As Darcy and Adam had talked about, income replacement benefit is going to be optional coverage that's going to be added on top of the standard coverage of medical and rehab and attendant care. Under the current system, many accident victims rely heavily on income replacement benefits to stabilize their finances right on after an accident. It's right there, up to $400 a week. It's usually not enough, but at least it gets them to stay on their feet. Now, these changes mean that we're going to need to look at other sources for primary support. And two sources are private disability benefits, short-term and long-term. Now, they're not available to everybody. You have to be an employee in most cases, and your employer has to have these disability benefits available to you. Just in short-term disability, it typically provides for up to 26 weeks of support, pays between 60 and 80% of your income based on the wording of the policy. And it typically starts after a short waiting period. So it's meant to kind of jump in right off of the bat. Long-term disability will kick in afterwards if you continue to meet the definition of disabled. At the 2-year mark, much like income replacement benefits, the definition of disability changes. But those are two options to look at now without the benefit of having income replacement benefits from the auto insurer. Another potential solution is looking at employment insurance sickness benefits. Now, most people know of EI regular benefits, which pay benefits to people who lose their jobs because of seasonal layoffs, shortages of work, and so on and so forth. A key component of the EI regular is that the person is available for and is able to work, but simply can't find a job. Now, this is not the benefit that we want to talk about in this context of lack of income replacement benefit. I want to mention EI sickness benefits. These benefits provide temporary income support for individuals who are unable to work because of an illness or injury. These benefits pay for 26 weeks max, so 6 months, and up to $729 per week. The benefit is more than the income replacement benefit, but it pays for a shorter duration. In order to get entitlement to EI sickness, you need a medical certificate or other supporting medical documentation. Now, this is not a be-all, end-all solution, but it can help stop the immediate financial freefall with the lack of an income replacement benefit. Another option is CPPD, which provides monthly financial support to contributors who are unable to work because of a severe or prolonged disability. This is not so much a short-term solution, but it should be considered early in appropriate cases now that there's no mandatory IRB. To qualify for CPPD, the disability must prevent the person from regularly pursuing any substantially gainful occupation and be expected to be long-term or of indefinite duration. The calculation in the CPPD benefit is based on a flat rate and an earnings contribution. You can get up to about $1,700 a month, which works out to about $400 per week. This is just a simple chart outlining those 4 benefits that I just discussed. The slides will be available online if you want to review this. I know there's a lot of writing on there. Now, the key thing about those 4 benefits, as I alluded to at the beginning, is these benefits require contributions, employee group benefits, paying into CPPD, insurable hours. Unfortunately, these will most likely not be available to people who are working under the table for cash, who don't have those employer group programs. And we'll need to consider other options for those people who simply will have no income support available to others. Other options that people may have to consider are litigation loans. For those who have lawsuits, look to getting tort advances early and often. Basically looking for every single avenue in order to get people back to their baseline. Talk a little bit about visitor expenses. I know there's a presentation after us that will be going into depth on this, but visitor expenses, Adam and Darcy had mentioned that these are more or less off the table unless you buy in on them. And these are very important benefits for our clients, for our patients. Families often incur significant costs: parking, hotels, transportation, meals, missed work, childcare. And family involvement is often medically important. Visitor expenses are not just emotional supports, they're rehabilitation supports. What are the solutions? I mean, they're certainly not ideal, but there's some things that we've identified, and I kind of spoke about them before with income replacement benefits. We're going to need to be looking for litigation loans. I think are going to become a lot more common because families facing mortgage pressure, missed income, travel costs, treatment expenses, they're going to feel like they have no other option. And quite frankly, there aren't many other options. Problems with this, as we know, that loans can carry significant interest. They'll reduce net recovery at the end of the day, and they should be approached cautiously. Nobody wants their clients borrowing against their lawsuit, but the financial desperation may increase under this new system. We can also consider advanced tort payments for those who have a lawsuit. This interim funding may become much more common and much more important. Unfortunately, we're somewhat at the hands of the insurer for their approval on these advance payments, but we're going to be looking for strong cases to request advance payments for those with catastrophic injuries, a clear liability picture, obvious economic hardship, major family disruption. And we're going to lean on the providers, the treatment providers, to help lawyers get those advance payments approved. We want the providers to make sure they're documenting everything, and not that you don't, but you want to document the necessity of treatment, the importance of family involvement, the discharge risks on sending them home without the family being fully up to speed on the person's needs. And we want the treatment providers to document the financial pressures that are affecting the quickest road to recovery. The better the medical documentation, the stronger our argument is for that interim funding. As we spoke about before, the auto is becoming the first payer in this system, except for medications. But one question that remains unanswered, and I don't have a solution to talk about here today, is what will happen? Will extended health benefits insurers top up partially approved AB claims? Let's take the situation where psychological treatment costs $3,000. Auto approves $1,200. Well, what happens to that remaining $1,800? Does the extended health come in and pay that difference? We don't have the answer. In short, the outcome will likely depend on a number of factors, whether extended health plan permits coordination after auto partially approves, whether the remaining amount is considered a denied expense versus an ineligible expense. It'll depend a lot on the wording of the group policy, and it'll depend on whether the provider is charging above what the auto insurer considers reasonable or necessary. We suspect that some group insurers may deny payment saying auto coverage exists, even if it's inadequate, and that's an issue. Partial approvals may create a new funding gray zone. There's this term that Darcy has coined, the no man's land problem, and this is another issue between auto and extended health benefits. What happens when non-catastrophic limits are exhausted and a catastrophic impairment designation is being pursued, but it's not immediately upon the $65,000 running out? Well, does extended health then become the primary payer in those circumstances? And if they do, what happens when or if that person is deemed catastrophically impaired? Does auto have to reimburse extended health? Who bears that interim risk? We don't have the solutions right now, but these are things that lawyers like the lawyers at the PIA are going to be investigating and keeping an eye on and working hard to make sure that there's as minimal of a disruption to everybody, including our clients. Expedited tort. Now, historically, the SABs gave claimants time and temporary financial stabilization. Tort largely addressed long-term solutions, long-term compensation. Without IRBs, without related benefits, delay itself becomes very harmful. Tort claims may need to move much faster because clients no longer have that stable, no-fault support. What does this mean? Refer early, refer to lawyers early, get them on board. The quicker the team forms around the patient or the client, the better the outcome. Delays in obtaining legal advice may now lead to missed benefits, delayed disability applications, lost evidence, worsening financial hardship. Experienced lawyers like the PIA can help quickly identify external disability policies, EI eligibility, CPPD disability eligibility, workplace benefits, and any other sources of collateral funding that can help temporarily stop the financial bleed. Lawyers will push for advance payments, look for interim settlements, dispute denials faster, pursue LAT disputes faster. I mean, we can only pursue them as fast as the LAT will allow us, but it's something that we're going to need to keep our eye on. Tort's no longer just about long-term compensation. It may become the mechanism that will keep families financially afloat. Now, there's a separate topic for another conference that I won't dive into, but there's proposed rules of civil procedure reforms that are potentially coming into place later this year, which are aimed at speeding up the tort process. this may actually help benefit the lawyer's ability to get quicker funding and to get quicker resolution for these people who are without compensation through the no-fault system. Lastly, I'd just like to say for everybody in this room what we can all do. I mean, as we know, many Ontarians will not understand how dramatically reduced their default coverage will be after July 1. You want to encourage your patients, your family, your friends to review their policies carefully, speak with their brokers, and seriously consider optional benefits. The people who are most harmed by these reforms will be the people that realize they'd never lost the protection in the first place. Public misunderstanding may become one of the biggest risks, and it's our job in this room to make sure that everyone that we know is aware of that risk. So, thank you.
We're just going to talk about some questions we were asked at break. I've got a handful I'm going to start with. I haven't had a chance to speak with Adam and Brandon to know if they have additional things, but why don't I start off answering a bunch of questions that I was asked, and then I'll ask Adam and Brandon if they were asked questions, they want to expand on anything I say, and if there's an opportunity, we'll let some live Q&A, but we do want to get people out to lunch in about 5-10 minutes, okay? The questions I was asked, somebody asked about the 40% non-insured population. That's a stat that comes from the Insurance Bureau of Canada, so it should be a reliable one. Their stat is approximately 40% of Ontarians do not have access to direct car insurance, so that's the 40% that are going to be stuck with just the basic med rehab attendant care come July 1st. The other 60% might have more if they were smart enough to buy optional benefits or if they have an unrenewed policy or they're deemed to opt in. The next question I was asked multiple times was about dependents, because the optional benefits cover named insureds, drivers who have car insurance of themselves, spouses, and dependents. Dependents are typically children, can be elderly parents, it can be disabled persons. So it can be either physical or financial dependency. And it's a fact-based investigation. So if you make a claim on behalf of an elderly parent that you care for most of the time, you should expect the insurance company to investigate whether they're truly, in the insurance company's view, a dependent physically or financially. So expect that, but it's out there. It's quite possible for people who are dependent on persons with car insurance. Somebody also pointed out that the reversal of the extended health coverage now being second and the accident benefits being first does have a negative impact, which is that the $65,000 for non-cat will be exhausted quicker because it's first in line. So it's tit for tat a bit, but that's a factor. Another question was whether it kicks in July 1 or the day after. It kicks in on July 1st, so if there is an accident on July 1st, they're under the new system. It's on or after July 1st. And two more things. The listed driver issue, it can't be a listed person. It has to be a listed driver. So it's somebody like a caregiver, a nanny in your household who drives. You can list them on your policy so they can access your optional benefits, or a roommate who borrows your car from time to time. Listed drivers can qualify if you call your insurance company and have them added. And the last one I want to talk about, I should really give credit to some ladies from London who approached me with this question, and I researched it. But the question was, for those who do not have access to visitor expenses, is there some angle to argue that their presence at the hospital, especially for injured children, to answer Nora's concern, whether we can pitch it as an economic loss to meet the definition of incurred as an attendant care expense? So to simplify it, and I think there's legs here. So if you have visitor expenses, that's obviously an unlimited fund subject to an optional benefit with a limit. That's the better choice. But where you don't, where you're in this 40%, you don't have it, and you're stuck with med rehab attendant care, if you're a parent visiting a kid at Sick Kids, and you got to be there, those expenses getting there, including the accommodations, with a Form 1 and attendant care assessment done at hospital, which we used to do all the time before this incurred problem creeped in the early 2010s, shortly after that when the government amended the legislation. Those expenses may arguably qualify as an economic loss, in quotes, within the meaning of Section 3 of the legislation, so that we can pitch to the insurance company that the mother has to be there, she had to pay the Uber, she had to pay a hotel, there's $200 We want it all back as an economic loss. It does eat into the 65 grand, but in the kids' cases, especially the ones with sick kids, they're probably going to be catastrophic. So there's going to be $1 million, gives you more wiggle room. I think that's a viable option. I'm not saying the insurance company will accept it without fight, but with lawyers of the PIA caliber, I think you got a good argument, and I think you can make a strong pitch, and some insurance companies would be sensitive to that. Adam, go ahead if you have any questions you want to expand on, or.
Yeah, sure. There were a couple of questions that I heard on the break that kind of resonated as something that people might want to know. The first one is the extended healthcare benefits taking a backseat role. Does that rule apply to accidents that already happened? And then will that change on July 1? And as far as I'm aware, the answer to that is no. The legislation is set forth as accidents on or after July 1, 2026. So the primary status of the auto insurance policy over extended health care is for accidents that happen on July 1st and after. The other question I was asked twice was, how do I protect, for example, my adult kids who don't live at home, but they live in the city and they don't have car insurance, and they take transit all the time and ride their bicycles and that sort of thing? And that's a really good question. And one of the potential solutions is that the regulator has opened up the possibility of insurance companies selling optional insurance that we don't yet know about. So is it possible that insurance companies will start to sell what should be a very inexpensive product that doesn't come with any bodily liability or bodily injury liability insurance, no third-party limits, nothing like that? It's just accident benefits for me as a non-driver of a vehicle. I would think that that would be very inexpensive because the risk is extremely low that it's ever going to be used. It's not yet offered, but it'll remain to be seen whether it might be down the road. Another option possible is if your family member, your son or your daughter who are in their 20s, if they have a driver's license, even if they don't live at home, there's no reason you can't add them as a listed driver on your policy. My son is 19. He goes to Queens, and he lives in Kingston, but he drives my car once in a while, and for that reason, I had him added as a listed driver on my policy. That's going to be an even bigger benefit to him after July 1 because he's going to be entitled to all of the optional benefits that I've purchased and am certainly going to maintain. And I can tell you this, for my 19-year-old male son, who is the highest risk driver on the road, nothing against him personally, but it cost me $0 to have him added as a listed driver. I can't guarantee it'll cost you $0 to have somebody added as a listed driver, but that's the reality. Is it's very inexpensive, and now that person is protected, whereas otherwise they wouldn't be.
Brandon, do you want to add to anything?
Yeah, I was asked many of the same questions that Darcy and Adam were, but just to paint the picture, one thing that came up in my discussions on the break was what happens when I'm driving a patient to, a community outing or, taking them to an appointment at the hospital. Before July 1, you're in a motor vehicle accident. Your patient who doesn't have auto insurance is able to claim through your insurance company. Post July 1, that won't be the case unless they're a spouse, dependent, or a listed driver on your policy, which is all very unlikely. And that's something that I think is very eye-opening to everybody in this room. There is that gap. And I think Adam had mentioned it briefly, but as far as we're aware, there's no non-driver optional accident benefit policy that's available for purchase for people who don't have their own insurance, but we're hoping that that will come into play. My personal view on all these changes is that they're going to go so poorly that the government's quickly going to have to realize that that they need to do something. There's going to be a lot more claims being submitted to the Motor Vehicle Accident Claims Fund, and just logically thinking that the government's going to say, I don't want to have to deal with this anymore. Let's shift this back to private insurers. So I think there's a lot of questions and not a whole lot of answers, and we're going to have to see how this goes.
Yeah, and just to expand on that, they could still claim from the driver's policy, but they won't get anything other than the med rehab and attendant care benefits. We'll try a couple questions, and if they go smoothly, we'll stick around for a few more minutes, and then we'll get to lunch. If they are too specific, we'll go to lunch and we'll ask them at the break.
Fair enough. Thanks for the presentation. A quick question we had at our table was if you could comment on if it's based on policy renewal date or if it's everybody's blanket July 1st, because my policy renews in November.
Sure.
Do I have that kind of until my renewal?
Yeah, it's policy renewal date. So the thing is, my policy, for example, renewed last month in May of 2026. So my policy will remain the same until May of 2027. And then I'll receive my documents that I probably won't really read from the insurance company that will allow me to opt out in writing from my housekeeping benefits, my income replacement, all of that, and I won't do it. But so if you're like me and your policy has renewed already or will renew before July 1, you need do nothing this year, and your coverage will be maintained.
And that'll continue until you, in writing, select otherwise. So that's the safeguard. It won't. The renewal aspect is a given because it can't change until then, unless you do something. But at the renewal date, the insurance company is likely to reach out to you saying, "Do you really want income replacement benefits?" And you may be persuaded to cancel and sign off on a bunch of things. I think Arvinder, go ahead. Oh. I think the question is if you have to pay more. By doing nothing, you're going to pay the same. At renewal time, they're going to hit you up to either extend or reduce, and they'll talk to you about how much you could save or how much additional you'd have to pay.
Yeah, and I don't know about you, but my insurance never goes down year over year. So you will pay more, but you'll get the same coverage.
Go ahead, Arvinder.
Yeah, first, I want to just thank you guys because this was really informative. But I'm wondering if the PIA could put together some kind of a video or some kind of thing that we could give to our clients, to our families, to everybody that we know about why they should purchase this insurance. Because from my experience, the brokers are not very good at doing this, even when the last changes happened, and people have no idea. And so if we as a group somehow
Yeah, I think that's a great idea. I think that's something we can actively do, but it doesn't solve the 40% gap problem, which is, in my view, the biggest one.
The advocacy group that acts on behalf of plaintiff personal injury lawyers in Ontario is called the Ontario Trial Lawyers Association, and they have put together a video which explains the changes and does to some degree talk about the need to not opt out and to purchase optional benefits if you're buying a new policy. So there are resources that are already available, and the media is picking up on it. I mentioned the Toronto Star article from Monday, and my wife just sent me a text that the Globe and Mail has picked it up today. So word is getting out. Nobody reads newspapers anymore, but if you did, you'd know all about it. So
one last question, and maybe Milano as well, but then we'll call it.
You guys didn't address carpools. Parents have carpools, grandparents take grandchildren, workers have carpools. What happens to the passengers?
Well, if you're dealing with children, for example, let's use the first example of parents carpooling their kids to and from school.
You're covered.
Those children are going to be covered by their parents' policies, assuming they have them. And assuming they have optional benefits, then those kids are covered because they're dependents. If they're not covered, they're in the 40%. Like if their parents don't have a car, then they're out of luck. Now, one of the things I keep hearing from people is like, they're worried that the person in their car is not going to have the same coverage that they have. And I get that, but there's nothing you can do about it. Yeah. If you can't make them a listed driver, unfortunately, you can't help them. Maybe one of the things, I talked about this with someone in the room, maybe one of those creative optional benefits that could be offered now that the regulation is allowing new benefits to be offered would be, I want passengers in my vehicle to be covered by the same benefits that I am. And it would probably only cost $1 or $2 a year, but we'll see.
We may lose Adam to the insurance industry because he's coming up with these good ideas. Milan, last question, and then we're going to have a lunch break. Yeah, so Dr. Narket's pointing out that, extended health and first priority saves money from your 65 grand, which is usually the case, at least for the first long while after an accident. Now that it's second in priority, it's going to be tapped out a lot quicker. At least extended health should kick in after that, subject to this no man's land issue if you later get a CAT designation, whether you have to repay your group health insurer and eat up more of your money. But we flagged that. Anyway, if there are more questions, please ask them at the lunch. If there are a million, we'll probably come back in the afternoon and try to do another one of these if time permitting. Thank you all very much. Enjoy the lunch break.